Good morning. Welcome to Fundamentals with Matt Burk. I am your host, Matt Burk. Thank you for joining us today. Appreciate you being here. This show is all about folks in the real estate business who are raising money from high net worth investors on syndications, looking to set up and run pooled investment real estate funds. And I have today guest JP Albano. JP and I have not met. But JP reached out to us and got an interesting background I thought folks would enjoy. So JP, welcome to the show.
Thank you so much, Matt. Happy to be here.
So looking through some of your bio and reading some of the information about you, sounds like I'm always fascinated with people that came from another industry that spent a considerable amount of time over there and then kind of decided at some point to make the leap into real estate. It seems like it gets into people's bloodstream and kind of captures them at some point or another. But why don't you tell us a little bit about your background, kind of where you came from, what you were doing before you got into real estate, and then we'll get into the meat of it here on the real estate section. But tell us a little bit about kind of your other life and where you came from before you got into real estate.
Sure, glad to. Thank you for that. So I've been an IT engineer ever since I can remember. I was always into computers. It sort of became natural to me. I got into a career of doing help desk related work, and then that kind of grew into doing systems engineering work, and then eventually being like the commando guy that after you buy a whole solution for your business, they would parachute me in, and I would spend the whole weekend or night deploying new mail servers or virtualization servers and things like that. And it was really really interesting. Learned a lot, but also kind of got burnt out. And then I found myself kind of thrusted into technology sales. That was another big leap for me, kind of getting over that limiting belief mindset of, oh my God, how do I make a living if nobody buys, that sort of thing. And it was probably one of the best things I've ever done moving into sales. And I found a tremendous amount of success in doing that. I sold over $200 million worth of technology to enterprise organizations over the course of about 13 years. And so that was quite a ride.
Yeah, that's a leap by itself, right? Because a lot of people that are in the engineering side want nothing to do with the sales side of the equation, right? So, but you clearly made that leap. So, kind of what happened there to get you into real estate? Was there kind of a defining moment where you kind of realized it was something you liked, or you came across the book or a tape or a conference or a webinar, or like what happened there to get that going?
Yeah, it's a great question. So for me personally, it was selfishly, it was interestingly enough about like paying a lot of money in taxes. The good part about being successful in sales is you have this big tax burden, which is a great problem to have. By the way, I'm not complaining, but it really motivated me to figure out, okay, how do I pay less in taxes? And I went down a path of hitting a dead end with trying to become like a day trader in the stock market, making money with that, and I lost a bunch of money doing that, wasted a bunch of time. And then I kind of got turned on to real estate. And as you know, there's a million and one different ways to get
Oh yeah.
into real estate, right? And the problem is like, which one do you pick? And for me, multifamily real estate, buying apartments, just made a ton of sense. And I got went headfirst deep into, I guess, the engineer mind in mine, analyzing, consuming, reading, learning as much as I can about how apartment businesses work, and then in getting involved with some educational groups that kind of teach you the ropes and how to underwrite, how to buy an apartment. And really has been never looking back since that point in time.
Yeah, what time frame is this now? So you were in IT for close to what, 20 years, I think?
Yeah, 20 years in IT. The real estate venture really started probably sometime in 2016, 2017. That was like the
Okay.
exploration phase and trying to determine, or where do I go, right? And then in the early parts of 2018 is really when I made a decision to go into multifamily as my investment vehicle. And originally I was actually interested in just becoming like a passive investor, but I just became so enamored with the people in the industry, how easy it was to partner, to grow, and how everyone was so willing to want to work with each other and add value. Something that was a little bit missing from the sales part when you're chasing down customers. At least that's how I saw it.
So tell me about I mean, there's a lot of different ways that people can play in the real estate space. So tell me specifically then as you got into it 2018, what role are you playing? Are you a direct sponsor? You're overseeing the investment? Are you raising capital from the investors and coming in as a capital provider to the sponsors, or how do you fit into the mix?
Yeah, I'm doing it hard. So I'm doing everything. Essentially, where we are today, we decided, my business partner Matt and I, we came together. We formed a new organization together called Significant Lifestyle Communities, and we are a vertically integrated owner operator. We focus solely on value add multifamily apartments. So for those that don't know, those are older apartment buildings that need, some new lipstick on there, right? Need a paint job, need some appliances. And we focus on the southeast of the United States. So multifamily, we built our own in-house property management organization because there's a whole story in that in itself. And then also we have our own construction management, so we're able to manage at the execution of all the renovations that go on, because the big part of value add multifamily is actually executing some sort of value add plan where you're spending or investing money in a property, you're doing something to fix it up, right? And so being able to have control over that was really important for us. So we syndicate, and then we own and operate our deals when we find them.
Yeah, so that's a lot of stuff, and especially being new in the business in the last 4 or 5 years. I mean, to go from not doing it at all to being completely vertically integrated is significantly challenging, right? So that's the kudos to you for doing that. Tell us about kind of your first deal in getting into real estate. How did that go? And we'll just give us a game tape on the first deal.
Yeah, the first deal I would say as an active sponsor was a 28 unit property that we bought in Houston, Texas. This is back in
Okay.
2019. It took about a couple of years of learning and getting prepared to get to the point where you
Yep.
can find a deal and buy it, right?
Yep.
And three other fellows, we joined together to raise. It was a $2 million purchase, 28 units in Houston, Texas, in this little kind of hip up and coming area called Independence Heights. For those that know the Houston market, off market deal, and we raised all of the money. We raised about $500,000 or so from friends and family, from strangers. So not only was it our first deal, it was out of market for me because I was living in New Jersey at the time. And we syndicated the deal from friends and family, and so there was a lot of things to overcome, especially for me, a lot of personal limiting beliefs around raising money from strangers and things like that. But we were able to do it. We came together, raised the money, we closed on time, and then we hired and relied on a third party property manager at the time to help us execute our value add business plan. And we ran into some challenges with them. We ultimately fired them, but that was our first deal, 28 units in Houston, Texas.
You guys still own it, or you have gone full cycle and sold it?
We full cycled it last year. 22 was a good year for us. We exited I think 2 or 3 deals. We were able to exit that within our time frame. We told investors about 3 to 5 year hold, and we were able to return, I think it was close to 2x equity multiple on that for just about 3 years time. And we were giving our investors quarterly distributions on that since basically Q1 of that project. So it was a great success for us.
So that's your first deal, and then how many deals have you done since that time, to give us some context of kind of size? And are you moving
Yeah.
up in terms of dollar sizes, and what would
Yep.
be the typical progression?
Yep. Yep. We did a little bit of stair stepping and then kind of jumping back down a little bit. But shortly thereafter that, we bought a 12 unit in Atlanta, Georgia, where I currently reside. So it was a project that we acquired shortly right after the Houston deal. And that one, we did raise money from just literally some friends and family, and we just did it together. Then we got involved in a 90 unit in Augusta, Georgia, that we JV'd with another group, and we help with some of the asset management and the auxiliary property management responsibilities. Then we acquired a 60 unit in Atlanta, Georgia. That was a deal in itself. This is original owner for the last 60 years. They were collecting rents on a weekly basis, and the last times they raised rents was about 2 years prior to us buying it, and that was a $10 increase. So we bought that for 900 grand, and we sold it for 2.45, a little over 2 years after that. And then in between there, we also bought a 278 unit in Cleveland, Ohio, or suburb of Cleveland, and that was our largest property to date. The most challenging because it's a portfolio of 6 separate buildings. And that was our first property where we did our in-house property management. It's been in-house since then, but that was our where we cut our teeth on that.
So coming from an engineering background with an engineering mindset, how have you been able to apply that to what is not always a really pretty straightforward, mathematically driven, process, which is, having tenants and people that you have to deal with and manage and so forth? What are some of the learning experiences that you've had here for other people that are maybe thinking about making the move from another career to real estate?
Yeah, that's a great question. So it's funny. Real estate really is a business about people, and to kind of steal a phrase, the business would be easy if it wasn't for all these people that are involved. right?
I had a friend of mine he works for the government or the county, and I really love being in public service if it just wasn't for the public.
Exactly. Yes. But I say that jokingly, right? So
Yeah,
I'm
of course.
fortunate that my business partner, Matt, he handles the day-to-day operational aspects of our business. So my job is really focusing on the acquisition side, the business development side. And I think that's what it calls on my strengths, being in sales for the last, 10 years or so, right? Being able to communicate with people, have calls, talk with lenders and banks and equity groups, and being able to position ourselves as a thought leader and a professional in this space. So that's really where I've been focusing. And then from an engineering mind, the big part for me that I kind of got sucked in early on, really enjoying, was the underwriting aspect, really getting into building a model, understanding the financial aspects of a business, tearing it apart, and then being able to kind of play with it to see how you make this work financially. And I think that's helped because it's allowed me to be able to speak well to how our business plan applies to the model and things like that. But it definitely requires a shift in mindset and a shift in skills or development of skills if you are going from one career path to another. And it didn't happen overnight. There's a lot of work in between, a lot of blood, sweat, and tears. But it is possible, right?
Yeah, and I think that the idea that you have more than one person in there is helpful because everybody has a different combination of skill sets, right? So it's really important to have somebody and know what you're good at, right? So if your mind works and I would say underwriting and deal analysis, deciding what to buy in the first place and why, how the numbers work, what assumptions you're making, all of that can be a much more analytical approach, right? The operational component is kind of where the rubber meets the road because of course you put together your pro formas, and then reality, it's like Mike Tyson said, right? You have a game plan going into a fight until you get punched in the face, and then you got to react. So I think that's a big lesson that I think for a lot of folks is making sure you know exactly what part you're good at, what your partner's good at,
And
being able to allocate those.
those are like the biggest things right there. It's understanding where you're good and bad at, where you could bring like a partnership at. And then the other piece too is really adapting. As I feel like this business is all about being able to react and adapt, not react all the time, but just adapt to the changing environment and making things happen and work. And that's the key to success, to not to steal your thunder there, but that's a really, really great point, Matt.
Yeah, Brad Smart, who wrote Top Grading, which is a great book, by the way, for people looking to when you're hiring people. It's called Top Grading. But he would just say the number one the number one highest characteristic of an A player is resourcefulness, right? Being able to figure out like how to respond to something because something will always happen that you need to be able to respond to. As you kind of progress in the syndication space, JP, have you ever considered the thought ever crossed your mind around doing a fund? And if so, have you ever done anything about that? Usually most syndicators I've ever met at some point or another think about the idea of setting up a fund. Seems kind of daunting, not sure where to go. But as someone who you haven't run a fund yet, correct?
We have not run a fund. We have set up the paperwork for a fund, but it's sort of like this new thing to tackle.
Yeah,
Um,
yeah.
and we haven't walked anybody in through a fund. We haven't done that, but a lot of people in my circle, kind of having grown up around the same time, I think you hit the nail on the head. They get to a point where a fund starts to make a lot of sense for them.
Yeah. And so as someone who so you've thought about it, maybe initiated it, because a lot of what we focus on here at the show, right, is on funds, people thinking about setting them up, lessons learned once they've done it. So as somebody who hasn't done it yet, but sounds like you've contemplated it, what are some of the things that go through your mind as you think about the idea of setting up a fund, or maybe fears or ideas or conceptions that you have about it, and why you may or may not choose to do it?
Yeah, I mean, I think as a business owner, right, as I mentioned, it rattled off a number of things that we're already doing as real estate professionals, right? We're property managing, which is a whole job in itself, doing the construction management, trying to find new deals, new projects, updating investors, doing raising new capital from investors, things like that. I think the idea of adding another element of complexity, if you will, right? Where, okay, now that there's this level of fund administration, you know, whose shoulders is that going to fall onto? Do we have to bring on a part-time fund administrator, right, on our team to do that? Can we give it to one of our admins, things like that? So I think it's a level of human resource human resources intensive work that has a layer of concern for us. And I think that's what's held us back on moving forward with deploying a fund or having raising money for the fund.
Yeah, I'd say that's all those are very normal things that people go through in the kind of progression of thinking about setting it up before you actually, get there. So how many properties do you guys have now, and how many units are you managing across your portfolio of syndications?
Yeah, so I just like to. I'll use the lifetime version because lifetime version is just easier.
Sure.
We're about 700 units. That's so close to about $60 million worth of transactions. We slimmed down, like I said, last year. So I think right now we're at like 300 change or
Yeah.
so.
Sure. And how are you finding the current market? What with everything that's happened with increase in interest rates and the kind of the slowdown in real estate, like how is that impacting you guys, and what opportunities do you see out there in today's world?
Question of the year. So it's been hard to close deals. Last year we had a deal fall out of contract. We had to extend it 4 times. Went through 4 different banks. So it was mission impossible to get a deal done. Last year we did one, but one fell out of contract. So we tried to do 4, and we only did one. So that part's frustrating. But I think from an opportunity standpoint, the part that gets me really excited, in case you can't tell from my voice, is like I feel like it's an awesome buying opportunity. We've got all of the stars lined up for me as a buyer to be able to leverage this against sellers. Hey, interest rates are high, cost of capital is high, investors expecting more. I got to buy a rate cap that's going to be adding more cost. I need you to come down on your price if you actually want to transact. And so I feel like and I'm already seeing it. I'm already getting deals from brokers that I have relationships with. Hey, so and so seller's underwater. Their floating rate interest loan, bridge loan is really high. They're looking to get out, right? They're looking to get out at the cost of the note, for example. And so, being able to amass a war chest right now of dry powder to be able to go out and, I don't say save, but kind of save these sponsors that might find themselves in a funky spot. We're working on a deal right now where we're buying a bank foreclosed asset in Houston, Texas. A relationship with the bank. They like, hey, can you help us out? We had to foreclose on a borrower. They couldn't make it work, and we need you to kind of help step in. So I'm seeing this as a wonderful buying opportunity to be able to buy things at a phenomenal discount.
Are you still able to raise capital from investors? I mean, how's that going? Even if you can find the deals, how's the marketing to the investor side going?
Yeah, the marketing has gone along pretty well, right? I mean, I think we also have enough. Thankfully, where we sit in real estate, or multifamily specifically, is a really interesting place where it's got a great story around recessions. It's got a great story around inflation. And then when you have all these crazy bank runs and bank failures going on, it's another reminder, hey, maybe you don't want to keep all that cash in the bank, right? Maybe there's a way where you can put it to work where it's low risk of going away, of vanishing, and also it can make some money for you, right? So I feel like as a capital raiser right now, I've got a lot of good bullets to put in my capital raising pistol to make a point like, this is a great time to put your money to work and invest in real estate.
So what's on the horizon for the rest of this year? You guys got some deals you're working on at the moment. Do you think you're gonna be close from here the rest of the year? Or that's the game plan.
We are busy bees. A lot of things going on here at my company. So I'm in the process of putting a book together, helping to teach other fellow tech salespeople how to passively invest in real estate. I kind of realized, man, this is the message I can speak to because I've lived in their shoes, right? I can help them save on taxes. I can help them put those great big commission checks to work in real estate. So we're working on that. I've got a personal podcast launching here next month in June.
Cool.
And we're working on 2 deals. The one in Houston that I mentioned, and an off-market deal in a Tennessee market that's about 400 units that will be looking to raise about $12 million for the next few months or so. So we're staying busy.
Good luck with all of that. So I know that as a sales guy that has done quite well, you must have some reading material or things that you've encountered along the way that helped you with your sales skills and all that. Any recommendations for the audience on things that can help them in their sales and their growth in their profession?
Yeah, in sales, I think there's 2 that I'll say, and they kind of both parlay into one another. One is this one on my desk right now that I'm going through. It's called Who, Not How. This was introduced to me a couple months ago, and it's a very easy read. It's not very thick, but it just really helps to reframe your mindset about forget about the problem, forget about you trying to solve the particular problem, right? Why don't you think about who can help me solve that, and they'll have the skill set to do that. That's kind of part one. Part two that works into that is another book by or a book by Michael Hyatt called Your World Class Assistant. And this is just a book about, as the title suggests, identifying and finding and working with an assistant to help you offload things that are in your drudgery zone, things that you're just like not a good use of your time. And if you're a salesperson, I think thinking about what are the things that make you the most money? Is it being in front of clients? Is it, taking them to lunch or dinner or things like that? How do you spend more of your time doing that and then giving everything else to somebody else, making quotes, getting pricing, working with channel, whatever the heck it is, get rid of that stuff and focus on your unique ability that helps you crush it in your day job. And I think those two books do a great job of helping you reframe and refocus that and understand why that's so important for you.
Yeah, that's great. You're the second or third person that's brought up the Who Not How book. I'm going to have to get that one in my Audible library and get going on that one. All right, JP. Well, I appreciate you being on the show, man. It sounds like you had a great start here in this business, and hopefully you're long-lived and make a lot of money for a lot of investors and for yourself. And look forward to crossing your path again when you get the podcast going. Let me know. I'll be happy to be a guest on there.
From your lips to God's ears, Matt. This has been great. Thank you so much for having me on the show.
Thanks for being on the show. Please, everybody, join us again next week for our next episode of Fundamentals. Thank you very much for being here. And in the meantime, stay sharp.